What's up, fellow traders? Hope you all having an awesome day. A quick update here on nat gas, gold, silver, and crude oil, starting with natural gas. And commodities are running exactly as predicted in my yesterday's video. But let's start with natural gas and let's jump onto the other commodities and let's see what's happening on there. So starting with natural gas, what do we have now? Price is about to hit a level of major support, and it has hit the level of support here on capital.com and here on Ovanda. So let's see here on Ovanda first. So at this point, we are about to hit a level of support, which is, in case you missed it, it is right here, 1.476. that goes to 1.645, a very big level of area of value, which is right here. If you look back here on 2020, the price pushed up from here massively, and if you look back here on 2016, the price has pushed up from the same level. That is why I'm now looking at this level as a level of significance to take my next buy trade. Now, getting to the level doesn't mean you are going to enter your trades blindly. So once we are in the level, then we're going to look for a conditions, and you know my conditions. Without condition, we are just gambling. It can still break and close below this zone, and then it can still push lower and continue to push lower. That is why we need to see a buying pressure within this area of value. If it breaks below this area of value and we have a candle close below this area of value, in that case we have a likely chance that price will then push lower. So very important to see a condition that is a bullish engulfing candle. A candle must fully engulfs the previous candle, including the wick, for your aggressive entry. Or if you have a double bottom pattern, that will be a less aggressive way to enter your trades if you don't want to enter aggressively from the area of value. Now, these are the entries you need to look for from the area of value. Now, I can still plot my zones, a Fibonacci level, which is from the lowest candle right here on 4-hour time frame, from this wick till the zone above right here. I've moved my Fibonacci tool because we did not get a pullback yet. So at this point, if we get a pullback, let's say we have no condition and we have a pullback to 50% retracement, that will be still a valid aggressive entry for a Fibonacci retracement. I'll keep my stop loss above. If you are an aggressive traders, a limit order right here, sell limit order, and take profit 1 will be 1 ATR, take profit 2 will be 1.618 retracement. So I'll keep my Fibonacci tools to see a possible pullback. If we have a pullback, there is a likely chance we can get a pullback to 50% retracement and then push lower. Now, if there is no condition, price is now in the zone and we get a condition I've already mentioned, like bullish engulfers or double bottom condition. In that case, I'm going to go long. If we have a 382 candles or we have a pin bar, in that case, I would like to enter a few pips above if we have that sort of entry conditions. The other conditions now I'll be looking at here on natural gas, on Ovanda, right here on capital.com, we are now already in the zone. So right here, if next candle right here closed as a bullish engulfer, let's say we have a next candle closed as a bullish engulfer, a bigger candle that engulfs the previous candle, including the wick, in that case we have a valid buy signal, and then price will likely head higher. We are already in the oversold situation. In that case, we have an extra confidence if we have a bullish engulfer with an oversold situation in the RSI. These are the conditions now I'll be looking at. Let's say we have no conditions. In that case, I'm still going to look for my conditions within the zone, anywhere in the zone. If we have a bullish engulfers or a double bottom entry pattern, in that case I will still go long. Now the zone here on capital.com, in case you missed it, it is right here, a level of significance 1.573 that goes to 1.676. If you look back, a level of significance, a price pushed up from here, reversed from here massively. That is why I'm still looking at this level for my possible trade. Remember, again and again, I'm warning you, without condition, you are just gambling. But if we have a condition, let's say we have a condition and you set up your stops and targets, and then if the price hit your stop loss, in that case, you entered your trade by following your rules. In that case, it's nothing to worry about. It is a part of trading. If stop loss is hit, we move ahead and look for next trade. But if you enter blindly without the condition, that is not what I teach you. Always look for the conditions. Once we have the conditions, place your trades with stop loss and take profit, and place your trades on your own risk. This is just my opinion about the market. Next one, we have Nymex. Nymex is now also hit a level of support. Now, I forgot to mention the Fibonacci retracement. You can still plot the Fibonacci retracement from the low of this candle to the zone above, and exactly the same method I've already mentioned. But here on capital.com, I will not use 1.618 retracement for my targets because it is below the zone. In here on this platform, if you have a pullback to 50% retracement, I will exit my trade with 1 or 2 ATR or maximum in between the zone. That's totally up to you. Here on Nymex, the price is in the area of value. If you look back, a level of significance right here, price pushed up from here massively multiple times. That is why I'm now looking at this level for my possible buy trade. I'm expecting a good bounce from here if we have a conditions, and I've already mentioned the conditions, which is a next candle If we have that, a bullish engulfing candle, make sure it is an engulfing candle, because sometimes the candle opens above the previous candle and it is still a bigger candle. That confuse some of the traders. Make sure it is a candle, the body must engulf the previous candle from the bottom till the top. That includes the wick as well for the strong entry. If it doesn't include the wick, that is still a valid entry, but not a very strong entry. So this is a zone now I'll be looking at for my possible bounce and a trade that is enough to hit your target. Then I will exit my trade and look for the next condition. If the price wants to reverse, it must break above 50 EMA for the change of trend. This is a condition now I'll be looking at. Less aggressive way will be next bullish engulfer or a bullish engulfer within the zone, or a double bottom pattern within the zone. Once we have that, we are good to go for our trades. Next we have gold. So at this point, the zone below, it is right here a major area of value from where we're going to enter our buy trades if we have a conditions alike. Bullish engulfers, double bottoms, hammer candles, 382 candle. So right here we have a swing high bullish engulfer. Now a very good example of an aggressive entry, a candle that engulfs the previous candle including the wick. So at this point the price is right here. I'm expecting a price to push up now at least $7. That is what the ATR is telling me. The volatility, we are not going to go against the volatility. That's why it's very important to keep your stop loss and take profit according to the ATR. Yes, you can add some numbers with the ATR. Let's say you want to go 1.5 ATR, that's totally up to you, and manage it till 1.4 to 1 risk to reward ratio. But initially I like to use 1 ATR. So at this point I'm expecting a price to push higher. If you are not an aggressive trader, wait for the price to form a double bottom, something like this. Mark your rejection box from the body till the wick. If the price breaks below this low, in that case the price will continue to push lower. For now, if you're an aggressive trader, we have an aggressive entry right here, and the price will likely push up at least $7 from the current price. And the zone the price is currently inside of, it is right here a major level of support, 1972.93, that goes to 1987.73 at where the price is currently inside of. Next we have silver, as nicely bounced up from the zone. I've mentioned price is now in the ankle level, not a major level. And now at this point, if we have a bullish engulfing pattern in this zone, something like this, if we have that, then we can get a possible bounce, not a reversal. Reversal can only happen if we have a bounce strong enough and break above 50 EMA. We have a bullish engulfing pattern. We have a 382 candle right here that pushed the price up. If you have entered at the close, that is enough to hit your target, and that is what I've tried to teach you. Don't get greedy by holding on with your trades, especially with the commodities. When the price bounced up in a downtrend, that is enough to hit your target. Exit and look for the next condition. If you break above 50 EMA, in that case we have a trend continuation, and as you can see, the price pushed up 37 points and the ATR is 19, so it pushed up to ATR easily. So at this point, if the price now breaks above 50 EMA, as now gold is at the level of support, if it pushes up from there, the silver will also likely push up. If it break above 50 EMA, in that case I want to see complete break above this high, and then I'll start to look for my pullback entry bullish and keep on taking longs till the price gets to my level above, which is right here, which I'm going to mention in my next video once I see a good momentum above this high. So I'm expecting a price to push higher from here once we are broken above 50 EMA. Last one, we have crude oil. Crude oil is now pushed lower. We had a bearish engulfer, a swing high bearish engulfer. When I see a big candle like this, I don't like to enter straight away because we already have a good volume inside this candle. That is why I like to enter at the 50% of this candle, which is right here, to enter in a less aggressive way. Set my sell limit order and go 1 ATR or 2 ATR for my target. So we have a valid buy sell condition with a swing high bearish engulfer at the area of value. I'm now expecting a price to push lower. If broke below 50 EMA, then we have a trend continuation towards the downside. For a less aggressive trader, we can still get a push up, possible double top pattern. If you are not an aggressive trader, I want to enter in a less aggressive way, then this is an area I will look for my double top trade. If broke above this high, in that case we have a signal that price will likely head higher. So these are the conditions now I'll be looking at for commodities. Hope you're getting value out of my videos. If yes, hit the like button for me. It really helps me in a YouTube algorithm. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.